Hi, good afternoon, everyone. So, in today's lecture, we are going to go ahead and we are going to talk about an important new topic, and that is going to be the theory of public debt management. So, we're going to talk about what is public debt and what is the difference between public and private debt. What are the different theories behind tax burden? We're going to go ahead and talk about that also. And how to manage it, right? Generally, and with respect to India also, how to go ahead and how to manage that. We are going to go ahead and talk about that. Okay. So please write down the name of the topic. Theory of public debt management, right? Now, see, whenever we talk about budget of the government, an important aspect of the budget of the government is that the government is going ahead and it is collecting the money from the people and it is spending on the people. But what has been seen more often is that the government usually is spending more, and this happens very common across the economies, that the government spends more than it goes ahead and it collects, right? We notice that the expenditure of the government is more than the revenue of the government, right? And that is where we understand that to meet this additional expenditure, the government usually goes ahead and it takes debt, right? There is some obligation of the government. Though this is something which the government tries to reduce as we go from developing to a developed economy, the aim is to lower the debt part, debt component, not take loan, right? But however, still we notice that even the past debt of the government is very, very high, right? And therefore, one agenda of the government is to go ahead and lower this obligations, right? And that is exactly what public debt is about, that whatever loan we have taken, right, from the people, maybe in form of open market operation, maybe in other forms, whatever debt we have taken, whether we have taken loan from the government has taken loan from the banks, the government has taken loan from business organizations, or the government has taken loan from individuals, right? Whatever loan the government has taken, the government has to repay that loan. And not only the loan, but the interest on the loan also, which is sometimes a very high amount of the deficit of the budget. Budget का जो deficit होता है, what is deficit? Expenditure minus revenue. So high component of the deficit is interest payment on the debt, right? So therefore, the government has to manage this debt properly so that it can go ahead and it can make interest payments lower over time, right? It can spend, so whenever we pay interest on the debt, it is said that this is an unproductive spending of the government, right? Whatever money the government is spending on the debt, it's an unproductive spending because there is no uh, GDP addition when you spend money on interest payment, right? Therefore, in the long run, the aim of the government is to lower this interest payment from the debt. And to lower the interest payment, you have to lower the debt itself, right? So you need to lower the debt. So that is exactly what this lecture is about. How to go ahead and how to lower the debt, how to manage the debt That is what we want to go ahead and we want to talk about in this lecture. That is the theory of public debt management. I hope this is making some sense to you, right? So please write down. The need of public debt arises because the expenditure of the government is more than the revenue, right? Despite the role of state decreasing rapidly in economic activities, there has been considerable increase in expenditure. Right? So we we have seen that uh, we have seen that if I compare India now with 1970s, the role of government in economic activities has reduced tremendously. Earlier, everything was under the public sector, right? But when we had the 1991 policies, when we had LPG, when we had privatization, the role of the public sector declined. Still, even though the role of public sector has declined in economic activities, we see that the expenditure of the government has been increasing rapidly. The government is still spending a lot of money, right? Now, how do we define public debt there, right? So, public debt can be defined as obligation of government, particularly those evidenced by securities, to pay certain sum to the holders at some future date. So there is nothing to explain in public debt. It's just a typical loan that is taken by the government, right? And since it's a loan, if you go ahead and you take a loan, you have to pay back at some future date. That is exactly what the government has to also do, right? The government has to make sure that it repays the money in some future date along with the interest. Right? Now, in this, what is the meaning of public debt management? Right? Management. Whatever loan you have taken, number one, that loan should be limited. It should not be any random XYZ amount, right? So you have to go ahead and you have to take limited loan. And then you have to make sure that you manage that properly, right? You have to make sure that you reduce the loan over time, not increase the over time, right? So the management of public debt means this to make the strategies, right? To one, lower the cost of borrowing in the long run, right? To ensure that in the long run you repay the loan, right? Because uh, whenever you take a loan, right, the public is taking risk by giving it to the government, right? Risk whether it will be repaid or not, right? So you have to try to minimize the risk of the public also, right? And you have to support monetary and fiscal policies also, right? You have to ensure that, so if you have taken a loan, for example, and let's say that the loan is for, the loan that you have taken is for spending on a flyover, right? Now, the moment you take a loan from the bank and you spend it on a flyover, you are increasing the interest rates. This is a macroeconomic concept. Because you are competing with the private firms to take loan from the bank, there is more demand of the loan, the interest rate is increasing. That's the crowding out effect. So when we take public debt, another aspect which we need to take in mind is how is it going to affect the crowding out, right? And is it going to disincentivize the investments by the private sector or not, right? So that is another thing which we need to go ahead and understand, right? Okay. So public debt can be defined as obligation of government, particularly those evidenced by securities, to pay certain sum to the holders at some future date. Okay. Now let's go ahead and talk about the classification of public debt. So the first one that we have is by source of borrowing. From where have you borrowed this money? And that has further to internal, external, right? Internal, this is raised from within the country. If I'm taking loan from within the country, right? It includes market loan, treasury, bill, borrowing from RBI, banks, small saving account. Just understand, whenever people are investing in the asset of the government, मतलब अगर लोगों ने सपोज स्मॉल सेविंग अकाउंट में पैसा डाला तो गवर्नमेंट के पास गया अभी के लिए, that is a borrowing of the government, that's a liability of the government, excuse me, which the government will pay with interest, right? So it becomes a liability of the government. So then you have, you have market loan, treasury bill, borrowing from RBI bank, small saving account. All these are internal debt, right? And it has no impact, doesn't affect balance of payment. It has no impact on balance of payment. Let's talk about external debt. It says borrowed from foreign government like World Bank, IMF, etc. Right? It is denominated in foreign currency like dollars, euros, right? And it does impact balance of payment account. Does impact the balance of payment account, right? This is your first one, which is by the source of borrowing. The second one that we have, that is by nature of obligation. By the nature of obligation, there are two kinds of debt. Redeemable and irredeemable. Right? When we talk about redeemable debt means something which can be redeemed in the future, right? Which has to be repaid at maturity. Redeeming date here, right? Irredeemable means there is no maturity date. People cannot get it redeemed. Only interest will be paid. This is very rare today. Uh, Usually you have something which will have a maturity date. So this is repaid at maturity. Example, government bonds, right? And this has no maturity date, right? Only interest is paid. Only interest payment is done, right? Then the third one that you have, that is by period of maturity. By the period of maturity, there are three: short term, medium term, long term. Short term means the maturity is less than 1 year, like treasury bills. Medium term means the maturity is between 1 to 5 years. And long term means the maturity is more than 5 years. Right. Then the next one that we have is the purpose, by purpose. By purpose, there are two again. One is productive debt and one is unproductive debt. Productive debt means, as the word suggests, something which is used for productive purpose, right? For example, if I have taken a debt which I will use for education, making a hospital, making a flyover, right? That is productive debt. And if I have taken a loan from World Bank or IMF, but it is for war, or it is to make salary payment to my employees, or it is to repay the interest on the earlier loans, then that is unproductive in nature, right? So this is used for capital formation, like infrastructure, agricultural, etc. And this is used for consumption, right? Like salary payment, war, interest payments on earlier loans, interest payment, war, etc. Right. So these are the kind of types of debts that you have, different classifications. Now let's go ahead and let's talk about the reasons why government borrows. Reason of public debt. Right. First, to finance fiscal deficit. So as I have told you, basically we know that there is, when do we have to take loan? There is an expenditure, there is revenue of the government. The difference between those two is deficit. Now for this deficit, I need money which I can raise through debt, right? I need money which I can raise through debt, right? So we can go ahead and we can say that it helps us to finance the public deficit. Second, to stimulate growth during downturns, which is your Keynesian policy. So during the period of recession, when the government has to increase the G component, right? That is also when the government can do borrowings. Third, to fund capital expenditure, road, railway, irrigation, etc. Right? To meet temporary cash shortfalls. So if the government has invested its money somewhere, मैंने अपना पैसा कहीं invest कर दिया, and it will come back after 1 month. And for 1 month, now I need money to do certain expenditures. Then for 1 month, I can take a loan from somewhere, right? Then to manage off budget liabilities. Example, food subsidy, areas. So for example, I have a liability which is not this year's liability, right? But or some liabilities which don't appear in formal budget document, or they are not accounted in the fiscal deficit, right? These are hidden liabilities. They are contingent liabilities, right? Then those are your for those who may need a loan, right? For example, if let's say I need to go ahead and I need to pay some subsidy to oil marketing companies, right? Now for subsidy, I need money. But rather than paying subsidy in cash, I issue them oil bonds, right? Now to give them these bonds, I need money. I may raise it through debt, right? Or let's say I want to do some kind of funding for electricity distribution. I need some electricity distribution reform, right? Then for that, I need money. So I can do some borrowings, right? So basically, why we use off-budget borrowing? Off-budget borrowings help us to keep our fiscal deficit low. देखो, the government has already to follow the FRBM Act, Fiscal Responsibility Budgetary Managerial Act. According to that, the government has to keep its fiscal deficit low. अब कोई ऐसी जगह पे पैसा किसी तरीके से ऐसे खर्च करना कि वो डेफिसिट में दिखे भी ना, वो बजट में दिखे भी ना, और उसके लिए हम लोन भी ले पाए और खर्चा भी कर पाए, दैट इज ऑफ बजटरी लायबिलिटी. बजट में नहीं दिखेगा तो फिस्कल डेफिसिट लो लगता रहेगा, बट उसके लिए हम लोन ले लेंगे और खर्चा भी कर लेंगे, right? So it keeps fiscal deficit under FRBM limits even when my liabilities are increasing, right? But it's a wrong thing also. It is distorting the true picture of fiscal health, right? But this is what is done, right? Okay. So this is about the reasons for public debt, why the government may